Good afternoon, everyone. It's Chris from Salsa City R as well as Axel. You can find me on both websites, Twitter, Instagram, Discord. You can DM me on Discord or get in contact with me on Twitter. Remember, we use this adaptive algorithm for side market, up market, as well as down market. This is for educational use. We're not a broker dealer, we're in the private sector. Use at your own risk, and data may not be copied unless requested from our website and getting in contact with us directly on the following two numbers that you have up here. Let's go to the first slide, and I want to say Merry Christmas, Happy New Year. Season greeting from all of us at Solstice and Axel. Enjoy the holidays with family, friends, and loved ones. Let's go to the next slide. I put here the SPY, which is the Fortune 500 ETF through spiders. And I used the New York Composite right here to show you on the weekly chart, going back 3 years from the highs of 2022 to the lows of October. We rallied up after coming back down in December. We basically almost broke even on the SPY. And on the New York Composite, it took us as well a little bit more time in 2024 to retrace back up. But you can see the New York Stock Exchange, the composite, is a little bit more weaker. We came back to the backside of the weekly channel and the 34 SMA and bounced off it on the weekly, while the S&P 500 came to the 18 simple moving average and bounced back up. So the RSI right now is a little bit on the divergence to the downside on both instruments. Let's see what the following week will hold for us on Monday. If there's going to be, this is the low set for the year to continue higher for the Christmas rally or not. Let's go to the next slide. And what I wanted to do is show you that the New York Stock Exchange since 1974, 2001, and 2000, 1999, what the drawdowns are in relationship to 2023 and 2024, where we are today. And I took the averages on the positive side as well as the negative side. These are historical rate of return. Make sure that this is for illustration use and education. You can see from 1974 what the total return in 2 years were. In 2001, after the Twin Tower was lost in September, it took it till 2003 to recover. We had a 2 year 32%. In 2007 through 2008, we had a 29.8% decline in the market till it recovered in 2010-11. So 2019, we had a nice return. The average yield in 2 years was about 24, the minimum, and the median was 35%. Let's take a look from 1980 on the Nasdaq through 1998, what the overall market can do if there is positivity in the market, including what we had this week in the Federal Reserve Board. As well, what I mentioned last week was the breadth of the market. You can see here that the breadth of the market was coming down in the last 2 weeks negative, while the stock market, the S&P and the Nasdaq were holding up very well. After the federal announcement, we had lost about $9.1 billion in 2 days, including the Wednesday, Thursday market decline in the crypto, in Bitcoin, in the equity side of the S&P 11 sectors. You can see that the negativity in the 11 sectors that week, and we came back down. Anything below zero in the breadth of the market to minus, 1,000 and below is very negative. And when you are above 1,500, you are in the positive side. And we can see that every time we had the push up, we came back in. We had the push up, we came back in. That was the only exception day that we had in the prior 3 weeks, which was Wednesday, that look up and come back to close above that zero. Let's go to the next slide. And what I wanted to show you is, in case you had invested in negative markets, you got to trade what you see on the charts, not what you think. Showing here just the negativity. I'm not trying to be negative, but I'm telling you, there is a possibility if you have $1 million and you end up losing 20, 30% of your portfolio, or even 40, 50%, you have the tendency, in order to make it back, how many days it takes to come back up. And that's a very bad negative vibe on a downtrend. Sometimes it does last more than a month, 2 months, 5 month, year, 2 years before we come back to a positive level. This was set, I did this on December 7th, and if you can see the prior week, this was done on December 14th. And this week I showed you the S&P sector. I did not put the date except December 21st before the Christmas holiday on Tuesday, so I just wanted everyone to be aware of it. And remember to check us out at Solstice. Get in contact with us, give us your commentary, and let us know how we can assist you in 2025. Let's go to the first two slides. I have the micro e-mini here and the Nasdaq micro Nasdaq 100. I want to show you how to draw a Fibonacci on a daily chart, taking a look at the 2 days ranges. If I take this high to this low here, you can see the retracement was minus 261 and we bounced off. If I do it a little bit differently, remove this drawing. Now, if I do this drawing from the Fed day, from the high to the low, what I want to do is use the measured move instead of the Fibonacci to show you how to look at it and calculate it's usually Fed day plus one. You can see we retraced it at 30%, the backside of this channel, and the 50 SMA bounced off to 25%, rallied back up to zero, cleared the Fed day low from the announcement from J. Powell, ran back up to retest the 50%, and came back in to close right in the uptrend channel, right on a positive note. Is there going to be volatility along the way? Let's see if this was the low for the week and Monday's created that low and we continue higher. So this is the way to look at it on a daily basis, the measured move. But what I'm going to do is do the weekly on both of them. So let's do the S&P here as well. We're going to go get a Fibonacci. And that Fibonacci on the Fed announcement was the high to the low. You can see we retraced the 20%, rallied back up to close above the Fed day. Once it cleared that, it ran back up to the 18 simple moving average. You can see where it ran to, and we closed right on the 32 or the 38.2 fib measured move on the Fed announcement. Is this a positive note on the S&P? Yes, it was a little bit more stronger than the Nasdaq. Let's just now go to one chart instead of using two, and I'm doing this on purpose so you can see where the measured moves are. Remove this drawing, and what I wanted to show you is in the sectors in the Mega 8 instead of using the Mega 7, which is without the Netflix. I used Mega 8 instead of the famous 7, Apple, Amazon. You can see the strength was in Apple, Alphabet, A and B, which is Google and Google. Tesla was a little bit on the negative side. Meta was on the negative. Microsoft was flat. Netflix mates NVDA came back from the from the woodshed after getting a beating on Wednesday. And you can see the sectors in the S&P 500. There's 11 sectors, from energy to consumer discretionary, financial. Always have them up and understand these sectors is always going to be rotation, utilities, material, consumer products, info technology, real estate, industrial, healthcare, telecommunication. And you can once again check us out at Solstice or Axel, get in contact with us. On today was on the buy volume, we had 906,000 contracts in relationship to the sell volume on the S&P 500, which was 375,000. Let's call it 376,000. So the buy was 70% more than there was sellers on that day in the morning, because everybody got caught. Oh, Wednesday's down. Wednesday was an inside day. I always look at the Fed day plus one in order to calculate my retracement if we're going to continue lower or reverse back up from those measured moves. Let's do this right now on intraday. I'm going to go to 30-day range, and I'm going to use a 6-hour chart on most of the measured moves. I'll do the Nasdaq S&P. While you can see that the Monday how where we were, and this is the Friday. You can see the fibs from high to low. We're going to go get a measured move to calculate the extensions to the upside as well as the downside. This is the highs and lows. If I zoom it down or compress it in, we can see that the 180 to 200 to the upside where it is in relationship to the minus 80 and minus 100. There's a gap up here. I had put this level here as support. You can see that a couple of weeks ago we tested the 58, 30, 55. We came close enough to it, missed it, and reversed back up. We are sitting on the 18 SMA on the 6-hour. We do have this back trend channel up here in order to clear the 50 SMA. Whenever you have an 18 and a 50 crossing, this is a death cross. Whenever you have, the 50 and the 18 crossing from the bottom. This is a bullish cross, and when it consolidates, it's in chop mode. You can see that there is compression. The RSI, when it reaches a peak, you get above that 70 to 80, 85 area, you peak up, and whenever you get to the bottom of the 15 to 20, 23%, you tend to get a reversal back from those extension. Can I draw a downtrend channel on the RSI? Yes, we are in a downtrend channel. It does not mean we are out of the woods, because this was a consolidation. Consolidate, break up, retest, retest, break up. Then we fell through it. This area is very important because it was tested once, a couple of days here, then another 2 days here on coming back to that 6,039, 6,040, continue higher. Now we've tested the backside of this area. If it does create a cup here and continue higher, that would be great to the backside of this channel and a breakout. But if not, trade what the charts offer you. Was the RSI diverging to the downside? And you can draw a downtrend channel. You can grab that peak from here just to show you how to look at it. You can get that first peak, and this is the second peak down to the other side. If this is broken, you look for the backside of the other side of the fan on the RSI, or the channel linear regression downtrend channel on the RSI, or vice versa when you draw it from low to the lower valleys and continue higher. When it breaks down, it's vice versa on either side. So we trade what we see, not what we think. So let's go now to the micro and in the micro NQ, you can see that the Fed announcement came in a little sharper. We had a Thursday down move, and on Friday a reversal back through the Fed announcement low to the high, and you can see the Fibonacci from high to low where it is. So we're going to go get a measuring tool. This is the high, this is the low, and the extensions to the upside and downside without being biased. We know where the extensions are without being any bias to either side. Whenever we peak at a high, we tend to reverse back to the bottom, and vice versa on the RSI. Are we in an uptrend channel? Yes. Can the Nasdaq clear the 61? Possible. If it doesn't, then we know the sentiment is back down. So we're going to trade that downtrend channel. And if it is broken, that's great to the upside. And if it falls back in, we pay attention to the 200 SMA and the 250 in this consolidation in this area before the run back up. So this is on the Nasdaq. So let's go take a look at the small cap IW. It's the Micro 2K, which is the Russell 2000. We can see that the Russell 2000, I'm going to do it on the daily. We can see where the highs were for the week to the bottom, and I'll do the measuring tool so everyone can see it. And we'll do it on the daily to show you how it looks like in relationship to these levels. Let's go by on a daily chart. We're going to do a 3-month out daily and push OK. You can see that the Russell, after looking up here, it created some kind of an M pattern, couldn't make it back above the 18 SMA and fell sharply. I am paying attention to this large consolidation in this area if we're going to find support on the Russell to continue back up, and not being biased to either side. But I am in a downtrend channel on the RSI, and if that downtrend channel on the RSI reverses back up from its peak, you can see there's the one valley, the other one, and we can use this one as a secondary. And if it runs back up, that's here, and falls back in, that's okay. But if it continues and breaks up to the backside of this channel, there's going to be momentum in the small cap IWM, IWN value play, or in the Russell 2000 RUT, the big contract, or slash RTY. So this is the micro 2K. You use M2K, depends where you're at, and you're going to be able to use that data. Let's go, for example, to show you how Apple reversed on the daily chart. You can see after the announcement, we fell back down, and Apple created a new high on Friday. Is the tech sector running very bullish? Yes, but you have to understand which ones are moving up, which ones are moving down in relationship to the overall market. If I put Tesla, and I'll show you Tesla, here's the measured moves. I know I sometimes put them up, I don't remove them. You can see the look above fail. If this support doesn't hold, we're going to have what? A runaway train back to where? This support backside here, where there was consolidation on a W pattern there's a little tiny gap between here and here. You can actually put it up on the charts. You can create a triangle, or you can create, basically edit the property. We can extend it, let's say, to the 25th. We'll do that till the 25th. And we're going to change the color on it to make it a little bit lighter and visible to the eyes. You can see where that support is in case we fall right through. But I think there's going to be support somewhere in this area for a bounce back, because this was the run up, consolidate, run up, come here. If it holds here and creates a shoulder, that's fine. If it reverses back up, that's fine. I'm just kind of giving you an now NVDA, because everybody's looking at the semiconductor industry. You can see in the semiconductor industry, about a week ago, I called this here and I said, be careful, this looks like a shoulder. This is the head, this is the shoulder on an angle. And if we fall further down, we can fall further down. And you can see we bottomed out at that consolidation and the breakout of this area here. You can see that this candle was retested, bounced up, came back down, tried to have an inside day. Then on Friday, we get a rally up, but we are still inside the Wednesday hump day because of the Federal Reserve Board. In order to continue, you need to see that 18 and 50 in the backside of this channel break up to continue to the backside up here. If not, you look for the backside of the 200 SMA and that downtrend channel that I have up here, which would be in this area on NVDA. So pay attention to what the charts are. And I'm going to go to SPX, which is the Fortune 500 company. And what I wanted to show you is this gap here. We retested it. We looked into it, didn't full 100% of it. So if I edit the property or I activate it, if I just go activate and I grab this and push it down to where that level is and extend it to the right, now we can see where that gap is in relationship to the overall market, if this is going to act as support or not, or we're going to fill the gap. So if I do it on a daily chart, if I compress it back in, we're not going to go all the way down here. I want to come back to this area to show you this was a support, the dump, test, reject, come back in, eventually break out. So from here, we had this push up, retested here. So I'm going to zoom in now. That should act as support. So we have this bottom area should act as very important support for the S&P 500, and it matches with F3 as well as the 116 SMA. If there's going to be continuation on the S&P 500, we're going to look for a breakout coming up. And if this trend seems to be in a downtrend spiral and we lose this area, we look for the consolidation in this area here where we came back and retested here in order to continue higher. But I think there may be a possibility of a Christmas rally because we tested the 34 SMA and rejected it on Friday. If there's going to be consolidation, create some kind of a cup and continue higher, that would be great. If it falls through and we lose the Fed day low and the Thursday low, then that would be questionable on the sectors of the S&P 500 to the downside. So we're not going to be biased. We're going to draw a downtrend channel on the RSI. And what I want everyone to pay attention to is that RSI, that downtrend channel, if it's going to break up and continue and clear the midpoint in the RSI to the upside or not. So I hope this video was very helpful. Once again, you can subscribe to the YouTube, smash the like, share with your friends. We're here to help. Take care. Over and out. Merry